I felt like ETH had finally gotten its mojo back. It spent most of 2024 in the doghouse. People were starting to get excited around it again. It was rallying up around $4,000. To see it pull back is a little bit painful. I look at this as more of a buying opportunity on ETH than anything else. One of the reasons I'm not worried about this pullback is it hasn't changed the regulatory outlook. It hasn't changed the fact that there are a huge number of new investors coming into Bitcoin who will find their way into ETH. And that hasn't disrupted the growth of stablecoins, tokenization, or AI agents, or made it more likely to take place on other layer one blockchains. And so my fundamental thesis for ETH is still intact, and therefore, still bullish, still looking at that $7,000 plus price target.
Ethereum started 2024 on shaky ground, but as the year progressed, it regained its momentum, rallying up to around $4,000. However, a recent pullback has been painful for ETH holders who are finally starting to feel optimistic. Despite this, Hougan views the downturn as a buying opportunity rather than a cause for concern. The underlying data supports this optimism. ETF flows into ETH, which were previously negative, have turned aggressively positive, reflecting a renewed interest from institutional investors. Over the last 15 days alone, inflows have totaled an extraordinary $2.5 billion. This shift underscores ETH's growing appeal among professional investors.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Underneath the surface, we've still turned the page on ETF flows into ETH. Those are now aggressively positive on a daily basis. We're still seeing, AI agents built in the ETH ecosystem gaining significant traction. We're still seeing ETH take market share on the stablecoin side. So I think the underlying trends are significant. But look, altcoins had finally started to rally. Now they're getting a little bit of a reset. I suspect that there are more value buyers in crypto now than there used to be. So I suspect it will find a floor, but for sure, it's painful to those ETH holders who are finally starting to feel good again. They've just gotten smacked down as soon as they put their head above water. Yeah, I think looking at the ETH ETF flows is really instructive because there was effectively none. It was negative until the start of November. And since then, we've seen significant inflows, like $2.5 billion over the last 15 days or so, which is an extraordinary amount. I think there are three major catalysts for that. The first, you have to look at the election. The election was good for Bitcoin, but it was vastly better for ETH. Everything that you care about in the ETH ecosystem benefits strongly from increased regulatory clarity. So no surprise that professional investors who looked at this market and were cautious about it pre-election started to be excited about it post-election. The second thing is that, the oldest story in crypto is people come into the market through Bitcoin and they study and get comfortable with crypto. And then 6 to 12 months later, they start exploring other assets, starting with ETH. So there was a huge influx of investors into the crypto market at the start of this year through the launch of Bitcoin ETFs. Those have now seasoned, they've made money, and they're starting to explore what else there is in the crypto ecosystem. And so that leads to them investing into ETH. And then the third piece was really what I talked about earlier, which is ETH getting its mojo back. ETH is at the center of, to my mind, three of the biggest trends in crypto, which is the growth of stablecoins, the growth of tokenization, and the growth of AI agents interacting with the crypto ecosystem. ETH has a dominant share in each of those three sort of industry trends. I think when you stack these three together, you come up with a bullish portrait. One of the reasons I'm not worried about this pullback is it hasn't changed the regulatory outlook. It hasn't changed the fact that there are a huge number of new investors coming into Bitcoin who will find their way into ETH. And that hasn't disrupted the growth of stablecoins, tokenization, or AI agents, or made it more likely to take place on other layer one blockchains. And so my fundamental thesis for ETH is still intact, and therefore, still bullish, still looking at that $7,000 plus price target. You're sort of playing out the altcoin thesis, right? Which is that wealth builds in Bitcoin and then trickles into ETH and then trickles into the next asset until it exhausts itself. That's been how altcoin cycles have gone historically over the years. The reason I'm not worried about that dilution of interest right now is if you think about that as like a series of buckets, which has historically been what it's been. This time, there's a difference this cycle, which is there's a huge flood of new money coming into that Bitcoin bucket, and it has months, quarters, and probably years to go. And so we're constantly refilling that bucket, even as it flows into these other assets. From an ETP flow perspective, I actually think the biggest winner, if it happens next year, is going to be an index product that invests across all of these assets, because I think there is some sort of like, which one do you choose question here on Solana. But I think there's enough new money coming into crypto writ large that the ecosystem can lift all of these boats, and that's what I expect. ETF specific side, I think you're going to see improvements in the ETFs. So you mentioned staking. I think that would be a big improvement if we could see that happen on the ETF space. The other big improvement would be in-kind creations and redemptions, which would both make the ETFs more liquid, more perfect, lower cost, etc. So you're going to see this improvement. Beyond what the SEC can do, I think you're going to see ETFs be approved on more wealth management platforms. Important to note that as exciting as the flows into these ETFs have been, they haven't been fully approved on Morgan Stanley and Wells Fargo and UBS and other major wealth management platforms. Clearing out the regulatory clouds makes that more likely to occur. So I think that will happen as well. But more broadly, what removing the regulatory cloud, or sort of the regulatory sword of Damocles that's hung over this industry, will do is unleash a million entrepreneurs who are going to build in the ETH ecosystem, who are going to build in the Solana ecosystem, who are going to build in other layer one blockchain ecosystems. I think the regulatory uncertainty has kept some of the best, most established, and most exciting entrepreneurs out of the space, and that will be lifted as well. So there are really multiple levels to what this change in Washington will do, from ETF specific to well beyond that I think we'll start to see sort of pay dividends in 2025.
Hougan delves into the broader economic landscape, particularly the dynamics of inflation. He breaks down the issue simply. Inflation is essentially a function of money printing. When the money supply increases while the quantity of goods and services remains the same, prices inevitably rise. This dynamic disproportionately benefits the wealthy, who understand how to leverage cheap borrowing to acquire assets that appreciate in value. Meanwhile, wage earners are left struggling to keep up. This inequity is at the heart of what Hougan calls the Cantillon effect, where those closest to the source of new money benefit the most.
What's going on is inflation coming down means you're just not getting burned as badly as you're getting burned. Things are still getting more expensive. They're just not getting more expensive as quickly as they were getting more expensive. So that's all the difference that's taking place there. The inflation, really, it's pretty simple. I mean, they try and make it complicated, but it's not. It's really just a function of printing the money. I mean, you've got kind of a fixed amount of goods and services in the world. You've got people who want to work. You got companies that can build things. And think of it in terms of like a game of Monopoly. If you suddenly gave everybody twice as much money, they'd be in a position to bid twice as much for every property, because so the price of the properties would go up 100% because everyone's got 100% more money. I mean, that's really all it is. And but the problem with it is that the people at the top, the wealthy and the smart, who understand this game, they know how to borrow cheap and they know how to buy assets that will go up and get pushed up. And we call them cantillionaires because after Richard Cantillon from the 16th century, who basically coined the term that the people who get the money first benefit at the expense of everybody else. So it takes a long time for that wage earner to get a higher minimum wage. Whereas, the minute they take the interest rate down to zero, the smart guys on Wall Street go borrow money for 0%, put it in something that yields 20%. I mean, if you and I could do that, we'd be rich. We'd be billionaires, So, and that's the core unfairness of the system. And I mean, this, you're serving me up. You're serving me up a platform, and I hope you don't mind, to pitch my book on.
That guy for avid reader. I think it's important.
This is exactly what my book talks about. And And the whole point, I think, as we talked pre-show, the whole point of the book is I want everybody, with people with zero financial knowledge, I want them to understand how they're being screwed and why the system is rigged against them. And I want them further to understand what we need to do to fix it. And we can fix it. Returning to sound money will fix it. But it's going to be a fight, because the people with a lot of the levers of power, they don't want to fix it because it's working for them. They're rich. But we got to fix it. And there are a lot more of us than there are them. So what will mess up their game is having an educated public that demands that we change it. And there are people who want to change it, even in politics. I mean, Robert F. Kennedy, understands this, and he wants to change it. He couldn't make it as an independent candidate, but he is at least a part of the Trump administration. And I think that, there is, in the United States, you do see change. You do see things going in the right direction, slowly, because, as much as Trump was much better than the alternative, he's got a few pieces wrong, in terms of what he's thinking, but that's okay. I mean, I think we talked about this pre-show as well, that the beautiful thing that's going on here is that the internet and technology and the, ability of, two guys to talk halfway around the world, and, podcasts and all this. I mean, Joe Rogan and Tucker Carlson are becoming more authoritative than CNN and CBS, because, people are beginning to realize that, those mainstream networks lie to them 24/7, and they want to understand the truth. And so they find an alternative, they get the truth, and then they vote with their feet. And, that's just going to keep happening more and more and more. And those, the liars are going to wither away, because people, the saying my dad used to use, you can't piss on somebody's leg and tell them it's raining. You know what I mean? I mean, they're gonna figure it out. So it is what it is, and it's going in our way, but I wish it would go faster.
Hougan passionately advocates for a return to sound money principles, which he believes would restore fairness to the financial system. He argues that an educated public is key to driving this change, as awareness can lead to collective action against the entrenched interests that benefit from the current system. Hougan also highlights the growing influence of decentralized media platforms like podcasts and independent channels. These platforms are increasingly becoming trusted sources of information, eclipsing traditional media outlets. This shift is empowering individuals to access unfiltered truths and make informed decisions about their financial futures.
Please like and subscribe my channel.